people keep booking profits. Why? Book your losses. Somebody asked me which is the best book to refer to invest in equity market. I always say your own checkbook. Most actually you're not able to beat the inflation part also. Believe me, you can't have a better retirement tool than equities. What do you exactly need? Here are the few principles which I've learned from my journey. We as a team manage around 3,000 crore of assets, and I'm here to share with you few principles on how to invest in 2024. Please watch this Josh Talks till the end. Hello everyone, I'm Kshitiz Mahajan. I'm the CEO of Complete Circle Wealth Solutions, and it's an honor to be here on this stage and speak to all of you. We are a wealth management firm as well as we are an asset management firm. So we run two businesses, and very happy to share between these two firms we manage close to about 3,000 crore of assets for our clients. I hail from a place called Chandigarh, born and brought up there initially. My mother, she's a professor, a doctorate in history. My father is a scientist. He used to work with ONGC. Blessed to stay with them as on date also. And initially I did my schooling from a small town which is now a district called Mansa in Punjab. And from there, this journey of my schooling started, and then we moved to Delhi. Got lucky again to go back to Punjab and relish good food of Punjab for my engineering. And after doing my engineering, I realized that it's hell of a ride, and maybe I'm not the right fit for this engineering field. And I started looking out for a job in a marketing department. But as they say that good things takes time, I ended up giving interview for civil engineer only. And I requested them that I want to be in marketing, and that's how I've been interviewed in marketing in Ansel Housing. And so I got lucky with this job, and first salary was 3,500. I was telling my mom that, my last pocket money in my last semester was 3,000 and salary is 3,500. And she said, that's okay, start. It's a good start. You are started earning. That's what is more important. This is the time for you to learn and then scale up to various heights. This world is here for you to conquer. And as they say that maa ka bola hua, is Satya Vachan, and blessings from parents were always there. And that's how this entire journey started. I joined in 2000 and 2001, dot-com bubble happened. And everybody knows, people who don't know about this bubble, all IT stocks were doing rockingly well. And suddenly, overnight, everything, KPOs, BPOs, we started opening, getting started burst, and markets falling because all the IT stocks started dropping. And that's my first experience of market crash. Although, I'm being honest, I was not investing into it. But yes, a lot of my family members were investing into it, and they were panicking. And I was like, why to panic? What has happened? Then somebody told me that how it works. Anyways, I was on the real estate side. I was selling houses, plots. I was giving commercial on rental yields. That's what I was doing. And I moved to Ultratech Cement. From houses, started selling cement bags in Jaipur, and I got a better salary. I got a new location, and lot to travel and lot to learn. As they say, the more you travel, the more you learn. And I got experience of plant also and different sector also. But from there onwards, the journey started where I came back to Delhi and started looking for opportunity in financial sector because the sector was doing well, and got lucky to have been placed with HDFC Bank. I got placed in HDFC Bank, and Mr. Vajpayee lost election. And again, I saw a market turmoil. That time, my family was investing into it. In fact, I was investing into it. And I still remember that, suddenly I was like, how can market can fall by 30%? And our investments got eroded by 25%, 26%. But then, a friend of mine who was from the financial sector, he explained me, this is mark-to-market movement. One should not panic about it. But a couple of my relatives, they were not happy about it, and they just redeemed the money in loss because market recovered. And what we saw from 2004 to 7 onwards was the bull run of all bull runs. Sensex from level of 4,200 when market fall because of Mr. Vajpayee losing election went to 21,000. And it was like, and now Nifty is at 21,000 as we speak. It was like a dream run. But many of my people, they redeem money. And the same thing happened. I moved to Nippon Mutual Fund, and same thing happened in 2008, global financial crisis. So it was a mother of all bull run. That was a fall of all crisis, which is global financial crisis. Sensex fell by 67%. Again, some of people who lost money, they never came back to the market. And all this kept on repeating. Many people, they used to come at the peak of the market, and they used to withdraw money when markets are falling. But anyways, I kept on shifting. I kept on growing in my own career. And in my last assignment, I was with Motilal Oswal. That's not only was my last job, but that was my last learning ground where I have learned a lot. All thanks to the promoters, all thanks to the culture which was there in Motilal Oswal, that I come across as it's a learning field where we have been given targets to read book on wealth management and your financial management. This is something was very interesting, and we've been asked questions over that what you have done, what you have read, what you have learned. That was a changing field for me in terms of the way I was thinking on investment side. And I realized that hardly 2% of people, and this is in 2014-15 talking about, are investing into capital markets, equity markets especially. And what type of big miss we have where in US more than 40% people are investing. Why our people are still getting bluffed by all these Ponzi schemes, committees and all these schemes where they are committing overnight you'll become doubler, you'll get double money in 21 days time. Why we all going through that? Then we as a team, me and my brother, my partner, we decided that let's start a wealth management boutique house where we can be on client side. We can be more client centric, where we can spread a word of equity investing, and that's the vision of the company also. We want to spread a word about equity investing, and I'm not here to give you any tip. I'm just here to tell you that this is how the journey started, and that's how we started our own company. As they say, the most difficult addiction is of salary, not of liquor and smoking. But we are able to get away with that addiction, and we started this beautiful company called Complete Circle. And like-minded people started joining us. Started with a very small set, about 200 square feet, with a common washroom. And as we speak, we are present in 8 different locations in India. And as we said, we manage around 3,000 crores of assets. So the journey of me getting my first salary at 3,500, and now we are managing 3,000 crore, with my brother, started with very fantastic allocation from our courier service guy. The first ticket we got of 30 lakh rupees to invest in fixed income. And we were very happy that someone trusted us. He came to our office and said that I know you guys will do right things. First of all, let me know where you should want to put my money. Here's the investment. And second, let me know how can I participate in your company. That was the first sign. And this is not in 2020 or 21 where startup culture has been growing. This is in 2015 where he asked that, can I have some stake in the company? So, and this was a bootstrap company. And that was like a very positive notion for us, very positive compliment for us. And from there onward, there was no looking back. Although you'll be very surprised that many places, we took almost 4 years, 5 years time to get some allocation. But then we kept engaging. We kept doing the right things. What we realize is eventually we all behave like, or we all are like softwares. We don't upgrade ourselves, we will get obsolete. So I realized that if you are good on content, you know what you're talking, then I think chances for you to get another meeting or next meeting is 100%, almost 100%. And that's what was working for us. Second, we realized that I think this is a time to collaborate rather than just doing things yourself. So we asked a lot of like-minded people to join us. So return on capital has a new name now. Return on content and connection. How well connected you are in markets and how good content you have. So every happy client over a period of time has given us more than 5-6 references. That worked in the right spirit for us. So why can't I have a good client and over a period of time he will give me reference I know. So that's how we started working in the right direction for us. And a lot of ideas started floating that how we can innovate on things. And this is what pushed us that rather than just taking us to one product line, why can't we have multiple product line? We have a base, we have some clients, and why can't we have the right product line for that client base? So idea of wealth management started when we started our investment journey, but then we realized that insurance is also a very important part, especially healthcare insurance and term insurance. And we never sold anything else. These are the two insurance products which we were very clear that to protect in terms of any emergency when you are injured or have some health issues and your investment will not be taken away by your hospital bills, you should have a healthcare insurance. And in case of anything happening to the person in question, one should take a term insurance. So I think these two things were clear, and we started talking about these two things also to our client. But over a period of time, idea was to spread a right word about investments. And you can't have that because I'm talking today, everybody will go tomorrow and start buying equities. No, you have to judge your risk appetite. You have to take care of your asset allocation. You have to ensure that you stagger your investment. Fourth, you can't stop at one level that I will not invest more. There has to be a discipline while investing. And the fifth most important point is that keep checking on your asset allocation and don't chase returns. So that's the sixth last thing which I'll say, that just don't put money because something has already run up. You know why? Why there is no other metrics else than just comparative return index on most of the funds? Because that work one has to do himself or herself. So if you want to look at what is a good fund, what is the idea of a good fund in on Google, it is just a past performance, but that's not going to sustain in future also. So some work one has to do at their level also. So these are the few principles one should follow, irrespective of how good the market is. Don't debate from your asset allocation. Maybe 5-6%, I understand that markets are good, you can debate. If your risk appetite is less, just don't debate much from your asset allocation. Now that helped us over a period of time. So markets keep on surprising you, and today, tomorrow, day after, some or other thing will happen. So market will fall. It has a different name every time. 2001 it was dot-com bubble. 2004 BJP losing election. 2008 global financial crisis. 2010, if you remember, pigs economy crisis, which is European economic crisis. 2013 interest rate crisis. Overnight interest rates were increased. 2016 you have demon. 2018 we have GST, and 20 COVID, 22 Russia and Ukraine, 23 Gaza and Israel. So some or the other name will keep on coming. These are nothing but various opportunities where if you have some powder drive on your side, you can invest in park money. So there are no written guidelines for investment, but there are few principles one should follow. I have learned myself. I have done losses in global financial crisis, and the loss amount was around 5.5 lakh rupee. So I tell all the people who listen to me, who talk to me, that don't pay such a huge price. Somebody asked me which is the best book to refer to invest in equity market. I always say your own checkbook. You have to pay some fees to market, and that fees is by investing some amount of money. And don't mind investing, but invest and experiment with a small amount. But at the same time, book your losses. Don't keep it to your heart. Just don't stick with it. Okay, boss, no, I can't book losses. At the same time, your opportunity is big when you book loss and invest into something else. But people keep booking profits. Why? When you book profit, one, you give gain, capital gain, short term or long term. At the same time, tax I'm talking about, at the same time, you end up looking for new ideas now. So if something is good and has a future, and that business is here forever, then why you are exiting that business if the management is clean? What do you exactly need? Why you do investments? First principle of investment, why you do investment is, you do investment to generate inflation beating return. When you have a country where the inflation is 6.5, 7%, and when you are investing into a deposit which is giving you 7%, now try and understand that inflation is post tax. The amount which you are receiving in your fixed deposit is pre-tax. Post tax, you are not able to beat the inflation part also. There are only two asset class which over a period of time has beaten inflation. One is your real estate, and second is your equity investment. Gold has been consistent like 8.5, 9% over a period of time. So yes, you can say gold, but gold can't be 100% of your assets. So I think real estate, you need a bigger amount to invest. Equity mutual fund, or let's say direct stocks, you can invest little amount also. The second most important aspect is your asset allocation. And asset allocation is important to gauge your risk appetite. There can be a lot of drawdowns because of market fall. So eventually market keeps on going up, but those drawdowns are a very much character of markets. But if your risk appetite is not high, then you should not invest a bigger allocation towards equities. Then you can look at a hybrid option or maybe a fixed income option on your side, and less amount to a large cap side of equity. That's the second principle. Third principle is, before walking on the journey of financial freedom, you should look at protecting yourself by taking a right cover on the healthcare and term insurance side. But that is very important for your dream, for your family dreams, whether if you are there or not there, to protect those dreams. It is very important. Fourth, never book profit, book losses. As I said earlier also, it's very tempting when you see 100 becoming 200, 300. You ask me, there are more than 10 mutual fund who has now more than 1,000. So mutual fund starts at a normal net asset value of 10. That means they are multiplied 100 times. And fifth, which is the most important point, is that equities are forever. Many people say that equities are only for young people, equities are only for mid-age people. Believe me, you can't have a better retirement tool than equities. So I think broader, I see that on an investment platform, if you follow these principles and if you don't look at shortcuts, you are very well sorted. And as I said, every time market will fall, it will have a new name. I still remember a very good story, and this is from Cold War time of US, when Russian ships were parked at Cuban seas and they were having nuke weapon. And one of the fund manager was buying, he was buying Citibank, Amex, Coca-Cola, Johnson and Johnson, and this trader was telling him that, boss, I gone mad. We are at the verge of a nuclear war, and you're buying all this company. Then he started laughing and said, if they'll nuke us, we'll finish otherwise also. If they will not nuke us, people will keep on drinking Coke, they will keep on banking with Amex, they will keep on banking with Citibank, they will keep on using PNG products. World is not going to stop here. So why over it? If that and these all things are available at a discount because there is a negative news in the market. So look at the negative news in the market, but then don't buy things which are really at the bottom of strata. Look at those businesses which will do well. So a very calculated approach towards your business also is required whenever you start something like this, because end of the day, business or any other company, if you value it in the same way, you can create a good company, good environment for yourself. And that's what we are able to do here in Complete Circle. We are very happy to say that we are blessed with friends like you. We are blessed with good clients like you, and we are blessed with a very good, healthy environment among all our family members in the office also. So that's the story from my side. Thank you very much for listening to me. Thank you.